question, it is a different question. Just that the knowledge that you are looking, there should be more than enough.
Okay, sir.
This Thursday we can have it.
Wednesday.
Oh, Wednesday is it?
You said Wednesday.
Wednesday, right? What time?
3 to 6.
3 to 6. Just highlight that.
Tadi student dia ada kecuali insentif dengan tax seminar.
Okay, let's get started. Last class, I think we stopped at chapter 2, right?
Yes.
We finished it, I checked, we're still halfway through, is it?
Until page 37.
Until page 37, isn't it?
Restriction.
The other chapters, how's your progress?
Not yet.
Because we got tons of assignment and presentation and stuff, sir. Sorry, sir.
We've got tons of assignment, presentation, and
Oh,
stuff.
stressful, sir.
Tons of assignment.
Today is today. This week is
They should give us 70 weeks for this subject.
Yes.
They're supposed to give us 70 weeks, I guess, for this subject.
Yes, I know. They want to do it at 13 weeks. Welcome, Grace. They like to cut costs. If they can, they'll always cut costs whenever possible. Okay, right. Let's go into this part. Put on. Very chat.
Aduh, sir.
So,
Okay, let's look at our question.
7. The restriction on the
37. Restriction. Bukan restriction dah. Dah. 38.
Where are we right now?
37, sir.
I think we finished this already, right?
Yes,
This part.
example 1 already finished.
Example 1 finished. Example 2 is it?
Not yet.
Example 2 and 3 not yet, right? Okay, this, I thought I gave you homework, right? You're busy all finished it, right?
Question 34 kita dah buat.
34 dah?
Dah.
33 dah?
Dah.
Dah kan? All done, right? Okay, right. We're looking at this example here. Very simple one. A company A has interest expense from all sorts of 1 million, tax EBITDA of 4.4 million. Okay, calculate the maximum allowable interest expense. Well, if your tax EBITDA is 4.4, how much is your allowable interest?
Allowable interest 4.4 million. Dah buat kan?
Dah buat kan ni?
Dah.
Dah. This one dah buat. I think this one dah. Example 2 and 3 dah.
Dah buat.
Okay.
Example 3 pun dah.
Labuan is where we are looking at right now, correct?
Yes.
We already finished
Apa?
example 2 and 3
Ada
because
tulis.
Okay.
yeah, we've already done it and got the answer for that. That's why I was thinking, I know we did that. Okay, now, let's look at Labuan. I'm going to run through Labuan quickly.
Nanti minta dengan dia.
We are looking at
Cerita
basic
pasal
ideas
cerita.
of Labuan, okay? Labuan can come out as an extra question inside your withholding tax section. It can be like 5 marks, withholding tax 5 marks, or Labuan could be 5 marks. Okay? Or could be bilateral, unilateral tax for 5 marks. Got it? Now, in terms of Labuan, simple idea, you know why Labuan is. It's a small island off Sabah. Okay? Malaysian government set it up as supposedly a tax haven. Unfortunately, it failed. Okay, unfortunately it failed. Malaysia couldn't compete with the other tax haven in the world, which is Bermuda and all the other countries. Alright? So, when Labuan was set up, a lot of people got pissed off with Malaysia, and they changed the law, or they changed the double tax agreement. They excluded Labuan. If they say you are a Labuan Malaysian company and you are claiming the Labuan tax benefit, you are not eligible for double tax agreements. So that's when the government of Malaysia came up with a rule that says you have a choice. So remember, notice that it's fixed rate 3% or 24% if you fail to meet the substance requirements. Okay, so that's tax requirements. It was seen as a tax haven. Some tax treaty partners didn't like it. They re-established their rules with Malaysia. Therefore, because of this, the Malaysian government made an choice for the Labuan companies to make an irrevocable election for companies to be taxed under Malaysian income tax. That means you could be in Labuan, but you can opt for being taxed under the Malaysian income tax. Now, elections to be subject to provisional income tax, basically meaning these countries have made it clear that if a company in Labuan did not elect to the income tax, then they will not benefit from the double tax agreement. Got it? So in this case, to date, 11 countries excluded Labuan, DTA. This includes Japan, Netherlands, UK, Australia. But don't worry, no questions will ask you about which country is excluding you. Got it? The election is irrevocable. Once made, all exemptions that you get for Labuan will be gone. So once you decide to be non-Labuan entity, therefore, you don't get any benefits of Labuan entity. Okay? Well, OECD agreement had led to the removal of, long time ago, Labuan entity had flat income tax 20,000. It doesn't matter how much profit you make, you pay flat 20,000 profit tax only, which is a very good deal. But then, because of OECD trying to balance global income tax, they don't want some country to be 3%, some country to be 10%. You know, they don't want this kind of weird tax behavior. So what they have done is they've asked countries to stabilize their tax. Everybody taxes the same way. That's why Malaysia also moving to 15%. Because why? Global minimum rate is 15%. So they said like, if everybody else set 15 and we don't set 15, then our companies may not be interested to come to Malaysia. Does that make sense? So that 15% is now being spread around. Okay, now, what are Labuan entities? This Labuan entity could be a company, could be a foundation, could be a partnership, could be a limited liability partnership, LLP, could be a trust, could be a bank, could be a financial institution. Now, whether it's Islamic or non-Islamic, it doesn't matter. All right, either are accepted as a Labuan entity. So you can be either a Labuan foundation or Islamic foundation. Doesn't matter. Can you give me an example of an Islamic foundation that's well known and in the newspaper every time?
Bank Islam.
No. Bank Islam is down there. Malaysian Islamic Bank licensee. That's Bank Islam down there.
Islamic Foundation.
Islamic Foundation.
Pass.
Not pass. The one that our current Deputy Prime Minister is stuck with.
What? The third Prime Minister?
Zaid is caught with some case with a foundation. Yayasan. Yes. That is called a foundation.
Oh.
Does that make sense to you now? Yayasan. That's where that will go inside. Are you clear? Not trust. Yayasan is not trust, remember? How you call trust in Malay?
Saham.
No, amanah.
Amanah.
Are you clear now?
Trust amanah.
You know? So the idea here is you have different names. So you need to know which entity you're looking at. Got it? Right, let's move on. Substance requirement. This is the minimum. That means if you don't meet this, you can be Labuan entity, but you don't get 3% tax. To qualify for 3% tax, you must have full-time employees 2 to 4 based on activities. Okay, must incur an OPEX of 50,000 to 3 million per annum based on activity. Basically, they look at your activity and say you must achieve this, then only you qualify. Got it? Preceding year basis assessment. That means they don't tax current year basis. They don't tax income tax. Income tax is current year basis. Year of assessment 2022, you submit 2022's your results. Does that make sense? So that's current year basis. For that, current preceding year basis is year of assessment 2022, you submit 2021's results. Follow?
So kalau ni for 3%. So
This is 3%. No, this is the condition to meet for 3%, 1 and 2.
so if they don't meet,
They don't meet, they are still Labuan entity, but they get 24%.
tak tahu macam why there's two rate.
There's two rates, 3% if they meet, 24% if they don't meet. Now, the 3% and 24% so special. The 3% and 24%, we look at it, is 3% and 24% of profit, not chargeable tax. You don't do the income tax calculation. You don't do income tax calculation. You just calculate your net profit, you just calculate 3% or 24% of your profit. No need to do capital allowance lah, that lah, there's nothing. So what you prepare is what you calculate. Does that make sense now? Okay. So that's at 3%, 24%. Now moving on. Labuan business entity means the Labuan trading or Labuan non-trading activity carried on from to Labuan, excluding any activity which is an offence under written law. This includes trade with Malaysian residents and Malaysian currency. These are all the trading activity. It can be banking, insurance, trade, management, licensing, shipping, or any other activities not being a Labuan non-trading activity. So then you have to see what is a non-trading activity. A non-trading activity is holding of investment in securities, stocks, shares, loans, deposits, or properties by a Labuan entity on its own behalf. So you have a company that owns a lot of properties around the world, got it? Or it could have a lot of loans given out to a lot of companies, okay? So that means it's going to be reporting. These are called non-trading activity, got it? Another one's called trading activity. Now, tax treatment. A Labuan entity is subject to tax under Labata in respect of Labuan business activity. Foreign currency with non-residents, remember foreign currency with non-residents or other Labuan entity, or in respect of any designated Labuan activity where it may transact with Malaysian currency also. So it is subject to tax with any of this. Okay, down. The key word here, net profit per accounts for Labuan trading activity. This is the big one, alright? Instead of doing all the calculation, you just find the net profit and calculate it. Okay, so tax is chargeable only on net profit as reflected in audited accounts. But any income from royalty or other income derived from intellectual property right by a Labuan entity shall be subject to tax under Income Tax Act 1967, not Labata. So here, if your company earn royalty, this one is carved out. They carve it out and then they charge it separately. Clear? Okay, the other one, you got intellectual property. Because this intellectual property right is a special issue because it falls into Income Tax Act, then you need to know what is intellectual property. You got patent, industrial design, utility innovation, layout, copyright, secret processes, trademarks or other rights. All of these are called intellectual properties. The tax rate, it is 3% on trading activity only. Okay, trading activity only. Non-trading activity of Labuan is not subject to tax at all. This is very important for you to understand. If it's a non-trading activity, no tax. I got worried. I said no tax, that one for music suddenly got happy already. Right, now, tax return and statutory declaration. Labuan entity, which are Labuan trading activities, must file annual statutory declaration and tax return. So they have to file their tax return within 3 months of the year of assessment. by 31st March every year they have to submit. Got it? So 31st March 2020, you submit for year of assessment 2021. Got it? 31st March 2023, you submit for year of assessment 2022. Got it? That's preceding year basis. Follow? That means that year you submit for the previous year. Okay? Now, the other part, tax rebate. If you pay zakat in Labuan, you are going to be able to deduct everything up to the amount of so you can deduct everything. Alright? Everything is deductible, but no refund if you pay excess. Non-trading activity not chargeable to tax. A Labuan entity carrying out a Labuan business activity, which is a Labuan non-trading activity, is not chargeable to tax. All you have to do is just do a statutory declaration saying that I'm not chargeable to tax. Your company can say I'm just holding loans, I'm only earning interest, therefore I'm not chargeable to tax. Or I'm just holding properties, I'm only earning rental, I'm not chargeable to tax. Does that make sense? Okay, payment of tax must be paid in, when the returns are filled up, the evidence of payment has been made. These are exemptions that are specifically available for Labuan entities. You got no direct taxes because it's a free port. No indirect taxes. That means what's the meaning of no indirect taxes? Well, that means you're not going to pay for any kind of customs and all that. Like, it's a free port status. Got it? How many free ports do you know?
4.
What are the free ports in Malaysia?
Port Kelang, Port Kelang.
Are you sure Port Klang is free port?
Bukan. Langkawi, Tioman, Bangkok.
I think so in Malaysia.
Labuan.
Free port. What's the list of free port? As of 1967, Penang free port status has been abolished. Notice? Therefore, you have this idea of free ports. We have Klang free zone, right or not? There's a few there. So these are all free ports. Okay? So free ports or free trade zones as they call it. PKFZ is one of it. Okay? Johor has one. Johor has one, correct? If you go to, I think that island, that funny island where they build lots of big building and nobody's staying there. Garden City is it? Forest City. Yes, Forest City. Right, that place is basically a free port also. So those are certain designated areas which are free ports, correct? So Labuan is one of them. So there is no indirect taxes, there is no stamp duty. Have you finished your stamp duty studies?
Sir, maksudnya Freeport tu designated area.
Huh?
Yang Freeport tu maksudnya designated area.
Designated area. It's a designated area as Freeport. It must be designated
Is it
by the
different
government.
specialized area?
Yeah, it's a specialized area. The government says like this is a Freeport. Langkawi has been a Freeport for very long.
Oh, okay.
Got it? And I'm sure you went to Langkawi, yes.
So they
Anybody not check go to Langkawi? Yeah, but let's say anybody not check go to Langkawi?
Me, not yet.
One. The rest of you all went to Langkawi. All of you went to masa kecil tak boleh guna. Don't understand anything.
I haven't go to Langkawi.
Langkawi dah go? Dah. And it's certain things are cheap like chocolates.
Yeah.
Rokok no more already. Rokok no more already. They stopped already.
Mana boleh dah.
Now they kind of they put it into the same status already. Iron liquor lah. So that's basically the idea of a free port. But there are other things that they sell cheap also lah.
Pinggang mangkuk.
Alkohol.
Alcohol, yes. Pinggan mangkuk, I don't know lah.
Tobacco sah?
Yes.
Maybe. So that's basically no indirect taxes. Got it?
Tobacco sah?
Tobacco also, but not all the places. Now I don't know why government has now changed the rules already. Okay, now you got Labuan entity is not subject to exchange control, so the amount of money you can transfer in and out is easy. Labuan entity is not is also exempt from withholding tax, so there's no withholding tax for Labuan entities. Now, receipt of income from Labuan entity in relation to dividend or interest of offshore company or trust also is exempted. They don't get taxed on this. There are some benefits for individuals working in Labuan.
rasa kalau offshore tu, kalau orang yang kerja offshore dia tak ada kena income tax lah.
Yes, you know. Offshore normally don't get tax because they are the idea of where you working.
Oh, they're not working in Indonesia.
They're not working in a specific country, isn't it? They're working in the ocean, so you don't get tax, isn't it? Because you neither here neither there. Unfortunately, now Malaysia, of course, wants to tax everything because of the foreign source income. They call it FSI is now taxable. Got it? When it's returned to Malaysia. Follow? So that's one. Now, individuals working in Labuan, for Labuan entity, if you work in Labuan, if you are any person from payment and benefit to 65%, if you are providing professional services, you are an audit firm, you are a law firm that provides services to Labuan entity, 65% of that income is exempt.
So group G kan sir?
I know this not doesn't go on the sales and service tax. Don't confuse it. They just say the idea of qualifying professional services as per the Labuan Act. This is under the Labuan Act itself. The Labuan Act will define what is this area. It is not going to refer to another law to refer. So always remember, each law is self-contained. They don't say like, can you refer to sales service tax in 2008? They won't say that. Yeah. So exemption of non-citizen for 100% of director fee. So if you have foreign directors, non-citizens sitting there, and then their fees, whatever you pay them is exempt. They don't get taxed on it. Okay, so they are tax-free. Exemption of 50% of employment income for managerial capacity. If you are in a manager capacity in Labuan entity and you're located somewhere, well, you do get 50% exemption of income, which is a good thing. And the last one is, this is the lowest one, you get 50% of gross housing allowance. So if you get a housing allowance, and you should be able to get an exemption of 50% if you have to stay in Labuan. Got it? You any planning to go to Labuan?
Ada apa je?
Ada apa? I think there's quite a lot of banks there.
Banks? For what reason?
Labuan, KPMG, is it? I don't know. Is there Labuan?
Oh, KPMG.
See,
Wow.
you see, that's the point. See, there's a KPMG in Labuan.
What?
Why would there be KPMG in Labuan? That's the point. There's no KPMG in Kelantan.
Because they want to avoid tax.
No, it's not that.
Because a lot of banking.
Let's see, Kelantan got KPMG, no?
No,
Tak
I
ada,
don't
sir.
think so. If there is, I want to work in Kelantan.
Tak ada Madin.
Sorry lah, tak ada lah.
Oh, tak ada
Memang
sir.
tak ada peluang pekerjaan kat situ.
Yes, please, it's easy, better for you to go to Labuan than to Kelantan. Okay, I'm sorry to say lah, but
Sedih sir.
Ipoh also got, Ipoh got, Penang got, KL got, Melaka don't have.
Tak ada lagi.
Melaka pun.
Melaka Deloitte
Please,
dah.
please, no, please don't go KPMG.
Melaka got Deloitte sir.
I look for KPMG Melaka, this is what I get. But then, you see, I'm looking at the picture and I'm going like, apa ni tu reflection lagi? I look around the place, it's like, where?
Dia buat malu lah.
You really want to work in a condition like this? I seriously don't recommend you to work in Melaka for anything you can. It's better you go Labuan. Better go Labuan. Okay. I don't see a KPMG in Melaka actually, so I wouldn't suggest you go to
Tak ada. Deloitte ke PwC?
Deloitte might have. I think there is one PwC in Melaka.
PwC.
So it depends where you're going. Please be careful. But Melaka is the worst place for you to work.
Why?
Why sir?
Because I'll tell you why. Your basic salary is 2.4.
Oh.
2.4. Okay, 2.4 to 2.5. Whereas you work in Johor, basic salary 4.2.
Wow.
Let's say you finish your CPA and you start, your basic salary is 4.2.
But it
Even
depends on
in
the
KL,
course
you
you got
start
sir.
with CPA is 4.2, 4.4.
424.
You all know or don't know the salary?
Don't
That's
know,
the starting salary for Big 4 with CPA. Without CPA, with a degree.
2.5 kan sir?
Huh?
Kalau degree biasa 2.5 right?
No, degree biasa, the normal degree is about 3.8 already right now.
Oh, 3.8.
Oh.
3.8, 3.7
Boleh
already.
catat.
They're starting at 3.7,
Kena sama
3.8. With CPA, I think maybe 4.2, 4.3 or something like that. It's kind of a big jump there. You all didn't know, did you?
Donors.
Yes, donor. So they
You
can.
get motivated for your work. Okay, so now, better to go Labuan lah, but salary low lah.
Oh,
So-
tak dapat 4K.
No, 4K only in 2 places. 4 plus K in 2 places.
KL and JB.
Johor.
Johor.
Oh.
Only in 2 places. Any other place you won't get 4K plus.
So, but they got high living expenses, so.
Johor not so bad.
LHDN dekat Melaka tak dapat kan?
Oh, at least it's not dapat di Melaka. Where are you posted? That one different story. You apply, they send you to Ulu somewhere, and you stay there lah. It's okay, you know not? High salary, low cost of living.
Oh, better.
Betul. You can come back with a big car later on. Okay, right.
Fire.
Now, let's have a look at this part. Okay, Labuan company has the following. Okay, guys, we're looking at this one.
Dia kena pergi hulu.
We're looking at Labuan company has the following income source for the year 31/8/2019. Trading with offshore, interest income, bond, royalty income, leases from Malaysian entity. The following are other costs, included in the financial statement for the calculation. Okay. Now, based on this, following other costs is included in the financial statement. You got depreciation, you got management costs spread equally, office costs, and other costs related to all 4 activities. Other information, got capital allowance available for trading and lease. Company did not pay any zakat. How much is the tax payable, guys? How much is the tax payable, guys? How do you calculate the tax?
Interest income. 24% ke 3%? Wait.
You don't have a calculator, let me tell you how to calculate that. What's the profit of the whole company? No, this is the sales. Of course.
Cost. 260.
260, right? Therefore,
Sini dapat.
tax equals to net profit how much?
260.
In this case, how much?
800.
So how much is the net profit? 1.1 million minus all of this, what do you get?
840.
840,
Net
sir.
profit is RM 840,000 times 3%. Right, how much?
25,200.
Tak. What do you do? Itu aja.
Why 3% because they already meet the
Assuming they meet. If they don't meet,
criteria. If they don't meet, 24%.
then 24%. That's all.
Oh, okay.
Hold on, but there's one catch to this one. And then just,
Dia meet kenapa sih?
no, I just say if they meet. They didn't say meet or didn't meet.
Oh, it's just we assume lah,
Ah.
assumption.
What's the answer here?
So what's the answer to this?
200. 1 600. Banyak ni.
Banyaknya of course lah. But on top of that, since the company has something called royalty income. So the royalty income will somehow have to be taken out separately and taxed. Does that make sense?
Yeah.
Okay, we have to handle that one separately. Let me show you how that's done. So a Labuan entity. $840, right? RM how much? 25,200. RM 201 600.
Kalau matematik soalan macam ni,
Yeah,
simple macam ni.
yeah. But you notice that you were going to do some massive calculation, right?
Yeah.
You're busy getting ready to do a massive calculation, right? It's called trap.
Trap lah.
Kalau sektor international ni simple macam ni.
Some of it is quite straightforward. No, Labuan is quite straightforward. Our entity is still has royalty income. This will be tax in addition under So on top of that, you have to calculate how much is it? 200,000. 200,000. Okay, then minus maybe 12,500 minus 2,000. So this is equally spread. There is a cost of some money here. You can see now 30, 80, 50. That looks like 160. Divide by 4. So that's about 40,000. So he's going to probably pay.
Sir, royalty bukan exempted ke?
No, it's not exempted. It gets specially taxed.
Special.
Remember earlier on I always say it's specially taxed here.
Is it section 4, sir?
No, it's over here. Remember I did say that, where did I say that?
For
To intellectual property.
Then? See, tax is charged only on net profit as reflected in audited accounts. On urban training activities by any income from royalty or other income derived from an intellectual property right by Labuan entity shall be subject to tax under Income Tax Act 1967. So this is what I mean by that. So you have to calculate this one, 200,000 minus RM. I think here was
Sir, tapi yang lagi satu ni dia kata no withholding tax for royalty.
no, they are different. Withholding tax for royalty is if you pay royalty to other people, no withholding tax. Royalty payment to other people is no withholding tax. Not you receive royalty, you have got withholding tax.
oh, this one we
This
receive
is
the
receive
royalty.
what? We receive what?
Oh, okay.
So this is 50, 80, 30.
Receive.
What do you get? Done.
So kalau interest income tu bukan non-trading activity bukan?
Yeah, it's not training activity, but unfortunately you got training activity together, so they look at your net profit. Kan?
Dalam per 1/4.
Because then all this cost is shared no?
For activities.
For activities.
So need to divide per activity as well.
Yeah.
Macam mana saya boleh tahu yang management cost yang tu under royalty income?
Ada bagi empat
Then
empat aktiviti.
can
Depreciation tak masuk lah.
depreciation only sell trading and leasing business.
So maksudnya royalty tu
So,
dua kali
trading
kan?
tak tinggi.
Kena tax dua kali lah. Too bad lah.
So, kalau
Tu bad lah.
dia katakan trading tak masuk lah. Masuk kena tax.
Okay. What they say is, if you are non-trading, you will get tax. If you're trading, you will get tax. If you are trading and you put non-trading, everything get tax.
Oh. If trading, belum trading.
Itu your fault lah. Who was you put together? Put two company lah. Put non-trading that side, trading this side. Then this one won't get tax, this one will get tax. You go campur, your fault lah.
Sekarang kena bayar dua tax saja.
Yes, sekarang kena bayar dua tax. Ini income tax, ini labata tax.
Double tax as well.
This is not double tax. This is too bad. This is
Okay.
labata tax based on profit. This is income tax based on your royalty income only. So end of the day, Labuan is a bad idea. End of the day, okay, Labuan seems like a bad idea, but you know lah, if you want to learn offshore accounting and offshore issues, you park yourself in Labuan. Apply to KPMG Labuan. The big four are there. Big four are there. You can sit there quietly and do your work in an island where nobody disturbs you. Small island. Are you okay? That would be your strategy. Remember, what's your objective? You want to learn offshore. Offshore accounting, offshore issues, all that. Go Labuan. First place, first step. After that, Bahamas. Bahamas. Or Cayman Islands. Does that make sense? Then finally you end up in Luxembourg. Luxembourg is one of those areas, Luxembourg and all that. Those are the big places. So there is a pathway. Make sure you follow the pathway. Depends. I'll tell you the road. You follow the road that you think you like. Can? Okay, now let's move on. Let's go to the next part. Okay. Non-deductibility for payment by resident to Labuan. If a resident company have any business in Labuan, they cannot deduct the expense. The expense will be restricted. Rugi lah. Okay, rugi. In other words, okay, if it's an interest payment, you cannot deduct 25%. 75% can deduct. Lease payment cannot deduct 25%. Any other payment, 97% cannot deduct. Only 3% can deduct.
Contoh sir?
I got case study there. Luther is a company that is established in Malaysia by parent company in Labuan.
Okay.
It reports a gross income of 2 million and has deductible operating expense of 1.2 million, which includes payment to parent, interest 300k, lease 200k, management fee 100k. Company has capital allowance 100k. Calculate how much tax must Luther pay. How much? Okay, so basically 2 million minus 1.2 million, correct? Okay, this is supposedly like normal business.
Yeah.
But now you have to add back,
1.2.
okay, interest 25% cannot deduct. So 25% of 300k, how much?
75k.
Are you sure? 75% of 300k is?
Or 75%.
No. So 25% of 75k, yeah?
Ah.
Okay. So you plus back 75k. You understand why we are plusing back already now, right?
Because it's interest.
Because it's interest and you cannot deduct 25% of the payment made to Labuan entity.
Oh.
Okay. Plus back 200k, 25%. How much? 50k lah. Okay. Plus back this one 100k management fee. Management fee is
Kosong. 97.
97. We'll add back all. Then put back.
Are you clear now? Then what is this? This is called your adjusted
Income.
income. How much is it? $1.022 million. Minus 100k equals
Dapat 98. Dapat tak?
so 922, correct? No, is it?
97.
Yes, right. 922k
Yup.
times 24% tax payable.
Tax period.
Times 0.24.
Is how much?
221,280.
221
280 tau.
280. Okay, done, finish. Are you clear? That's the meaning of you make payment to Labuan entity, you cannot deduct everything. You got restriction. So when your bill come from a Labuan entity, you have to be careful. Okay?
Okay.
That happen if the parent company located in Labuan, sir.
Yeah. Unless
Parent company is object to be.
To be tax under.
are you okay with that? So this add back, just remember this add back that you see here, this add back that you see here, this number that you see here.
So if it is taxed under ITA,
Then no need to add back.
no need to add back. Okay.
If you tax under ITA, no need to add back.
IDA tu
Income tax. Remember earlier on the company can make an irrevocable election. Got it? Done. That covers this one. Can I move
So
on?
what if the parent company located in Malaysia but they do the service in
No,
Labuan?
as long as they are Malaysian company, they're Malaysian company.
Oh, it depends on what.
Whereas what tax framework they are under.
Okay.
What tax framework they are under. Are they under the Malaysian income tax framework or are they under the Labuan tax framework? Got it?
Okay, got it, sir.
You can be under Singaporean tax framework, you can be under Malaysian tax framework, you can be under Labuan tax framework, depends on which framework you are located under. Can?
Can, sir.
Okay, can I move on? Now, next thing we're looking at is of course selecting tax haven. If you're going to get a tax haven, is basically you want a place where you can shelter your tax, or you want to put all your money there so that you don't get taxed so heavily. Tax havens got criteria. The tax haven criteria, notice some of this Labuan has no withholding tax on distribution and payment of non-residents, no anti-avoidance provision that might negate any tax advantage, absence of corporate tax or income on capital, got or might have minimum tax, got it? So that it must be very little tax or minimum. Okay. Income received from outside the tax haven should be fully exempt from tax. So anything come from overseas is exempt, which is what Malaysia had for a long time. Malaysia had this rule for a long time. Of course, now it's a different story. Got it? Okay. So double tax treaty exists to reduce tax at source location to nil or nominal amount. Which is the countries that are well known? I think you already know the countries like Seychelles,
Switzerland.
Switzerland, Singapore. All these are the well-known tax havens. Got it? So working in those countries are a pretty good idea. Singapore love to take foreigners. Okay, repeat that. Singapore love to take foreigners. Unfortunately, Malaysian quota quite full lah, but any other foreigner, Indonesian, different countries, they love to take because they got limit. The quota never full. Their country runs on foreigners, you know that, right? Okay, it doesn't run on Singaporeans. All the Singaporeans leave very fast. So, other tax considerations, you have to make sure it's free from exchange control, adequate, efficient, inexpensive communication, that means internet must be superb, minimum disclosure in filing of company returns, and must be politically, economically stable. Plus, you got financial and other professional support must be well developed. Now, understand this part. Financial and other professional support must be well developed. That's the reason why you see a KPMG office in Labuan. They need that. It must be there because there's a lot of business activity there. Got it? Okay. So, areas where tax havens have been used is for group financing. That means they set up a centralized loan provider. They can set up a management company. They can set up a trading company or purchasing company, or they can set up an insurance company. So they place these types of company in the tax haven and then they charge. They charge everybody. Got it? Understand what I mean by charge or not? For example, you see Google Island. Okay, Google. Yeah, I think Google and Apple, both of them the same thing. What they do is they set up a company in Ireland, which is part of EU, who will charge all the European Union companies, the European Union Apple, all the revenue is brought back to Google Island. All the revenue is brought back to Google Island, and then they have Google Netherlands. All the money is then charged from Google Island to Google Netherlands. Yeah. Then they set up another Google Island company in Bahamas. It's an Irish company, but resident in Bahamas. And there is a treaty between Netherlands and Ireland that transfer between the two countries got tax exemption. Understand now? So what Google do is they take all the money from Europe, all the profit, bring it to Ireland. Then they transfer to Netherlands. And then they transfer back to Bahamas. Tax rate in Bahamas is 0.3%. So they basically take all the profit from whichever country, send it back to Bahamas, tax rate 0.3%. They avoided tax because the normal tax rate is about 30-40%. Makes sense? So that's why Google and Apple and all these people, they pay very low tax. Top Glove, Malaysian companies also do the same thing. What you think Malaysian companies don't do? Malaysian companies will do the same thing. Big Malaysian companies do the same thing. Does that make sense? Especially recently, ever since they got hit by Cukai Makmur. Recently in Malaysia, they came out with Cukai Makmur. You know the Cukai Makmur, right? Cukai Makmur is where all the big companies who earn more than 100 million profit had to pay 33% tax. 33% tax for the COVID one-off charge they charge. So all these companies took a big hit, and ever since they got a hit, they went like this: never again. They went like, never again we're going to let this happen. We will now engage in full tax manipulation to push out all the money. So they will now begin, all the big companies have now engaged all the top tax consultants to shift their money out of Malaysia. You only need to do one time. You just hit one time, everybody panic. Okay, that's Malaysia. Okay. So because of this, do remember Malaysia of course got withholding tax withholding tax. Okay, transfer pricing is also a big idea. Remember, transfer pricing is part of this idea that you're looking at tax havens. Remember I told you what? Ireland or European Union push to Ireland, transfer. From Ireland push to Netherlands, transfer. It's under transfer pricing. And the whole idea is transfer pricing. Okay, that's why transfer pricing is a big area of tax specialization. Okay, later on you're going to become a transfer pricing specialist. You can take Chartered Institute of Transfer Pricing Tax or something like that. There's a specialized division of transfer pricing. All right. So what do they do? Well, DG has issued transfer pricing to determine that there is something called regulation. Okay, in Malaysia we call it we got something called LHDN. Transfer pricing regulations. Okay. If I repeat again, if you are planning to go for this job, you're applying for Big Four for this job, you make sure you read everything before you go. Our class doesn't cover the whole thing. This is a lot. See, intergroup financing, documentation, cost lah, what is cost contribution, very, very detailed, got it? So you have to read this whole thing, make sure you know everything here, then you go for the interview. Don't just like, I just finished degree, I'm here. Then they'll ask you, oh, you're interested in transfer pricing, what do you know? Transfer lah. No, you do need to know your stuff, got it? Like when you go for the audit interview, they will ask you things like deferred tax, depreciation, bad debt. They're going to ask you how to account. So if you don't know the accounting, they put you down first. They'll pick someone who knows their accounting first. They're not going to put you up the rank and say like you must be taken. So when they give you the interview, they'll ask you things like how do you handle deferred tax? Tell me the deferred tax for this transaction. They will ask you technical questions. Let's be clear, they will ask you technical questions. If you're not technically competent, they'll put you down first. Unless they cannot find somebody, only they'll take you. So you must make sure you are technically competent before you go for the interview. That's it. Make sense? Okay, so this area, if you're planning to go for transfer pricing, fair enough? You need to memorize everything here. The whole thing here. Fair enough? Okay. What else? Let's say I pay you 10,000. What are you going to do? Sit there and fill in numbers. ChatGPT can do that already. Got it now? So you got to understand how you kind of add value. Alright? Okay, now in this case, cross-border transfer. Cross-border, that means from country to country. Okay, from country to country. When goods or services cross national boundary within a multinational group. That's an example of what I talked about earlier on. All the European Union countries going to Ireland, then going around. Got it? Same thing, Malaysia has Top Glove have China factory, factory in Malaysia, factory in Indonesia, they have different locations. They move it around. How is that going to be taxed? Okay, that's called transfer pricing. Service transfers always subject to withholding tax, it's always more complicated. Then got domestic transfer pricing. Now domestic transfer pricing simply means you are moving profit from a pioneer company to a non-pioneer company, or non-pioneer to pioneer. Why? Because non-pioneer company get normal tax. Pioneer company get 70% exemption. So if you can move the profit across to the pioneer company and show the profit there, the 70% of it is not taxed. So there is a motivation for you to manipulate and transfer out. Got it? So that's transferring in terms of domestic transfer pricing. Management fee, royalty, interest rate, all of this are in normal, and you might have low tax countries. Do remember, any fee, royalty, interest being charged from a low tax country will be under scrutiny. Okay, scrutiny. So transfer pricing audit and transfer pricing investigations are kind of normal. Kind of normal. Thin capitalization, not a big issue. It has been replaced by, this one has been replaced by tax EBITDA. Remember the tax EBITDA we already talked about earlier? Okay, so that's areas where transfer pricing. But anyway, what happens is whenever there is a loan from a parent or parent related, it's going to be subject to the tax EBITDA rules. Okay? Okay, that is done with this part. There are transfer pricing methods. Basically, how IRB determine whether your pricing is okay or not. Your pricing is okay. There are actually 5 methods. Okay, but the 3 main methods are comparable uncontrollable price, called cut method. You got resale price method, or you got the cost plus method. So if you look at the cut method, they will look at what is comparable transaction with bona fide transaction. That means normally how this company sell. They see the price normally sell. Resale price is goods sold to associated company is adjusted by final sales value less markup. So they look at everybody else's markup and adjust for you. Or they look at cost plus what is the normal markup when they sell this product. Here, basic rule for establishing transfer pricing today is not challenged. So this is the big area of, if you're doing a transfer pricing, you want to make sure you avoid re-invoicing through a tax haven. So if you go, the moment you touch a tax haven, the moment your transfer pricing touch a tax haven, IRB will take a magnifying glass and look at you.
Tak heaven tu macam mana sih?
Kan tax haven I just told you, right? Bahamas, all this place. You go through all the 0% tax location. Your invoice coming from there. Any invoice charge coming from these locations, IRB will look at it. So imagine you are both sides. You can be tax transfer pricing specialist for the company, or you could be transfer pricing specialist for IRB. As an IRB person, you need to know what to look for, signs that they are doing something funny. Got it? So the moment they have transfer pricing touch a tax haven, move to a tax haven, you say, bring me all the documents I need to review. Follow? Okay. So avoid re-invoicing to tax haven as far as possible. Be consistent on pricing. Pricing keep up and down, moving also got problem. Substantiate transaction with valid and proper documents. Every transaction must have documents. IRB might invoke anti-avoidance rules under section 140 where they can adjust the price. Section 148 they can substitute the price or disallow interest as associated person, or section 141 extend power to adjust transactions. Don't forget they've added one more call, section 140C, which is restrict interest. Okay, so those are all the things IRB can use to kind of apply. Now, these are the minimum. If you're going for an interview for transfer pricing within the Big Four, this is minimum knowledge, got it? Maximum knowledge is the regulation.
The one you show.
Yes.
Okay.
Technically, that is supposed to be one full topic, not SST. SST is not supposed to be one full topic. Transfer pricing is one full topic, because it is a huge area of study. SST is this much. Transfer pricing is this much.
Gila. Tak pernah saya tak yakin.
SST is this much in the world of tax. Not SST, you see. Even some, the tax people, they will study stamp duty. Bachelors in tax, they study stamp duty as a chapter, as a subject. That's like that much of tax. Okay, but they're not studying transfer pricing, which is a big area. Got it? So have a look at this part. Okay, ACE sells 70% of its product to associated company Breed and for $100 and sells the balance at open market $150. Extend treatment for transfer pricing. So what's going to happen here? ACE sells to associate company at lower price compared to what it sells to outsiders, indicating that the price is not arm's. Does that make sense? Not arm's length, alright? This is based on comparable. So remember the technique we're using is comparable, uncontrollable price method. Okay? So you have to increase to 100, 150. Does that make sense?
So what does it mean by the price is not arm's length?
Yeah.
Maksudnya?
What is arm's length mean? Arm's length means like normal.
Oh.
Like normal people do business, this is the price. But this is associate company, so we sell cheaper. That means it's not arm's length. The moment it's not arm's length,
It's not normal.
understand what's going to happen?
Lagi mahal.
Yeah, you have to now think about IRB looking at it and saying like, oh, this is not arm's length. Trying to shift profit, I'm going to charge you at arm's length. So I'll adjust your price from 100 to 50. I'm going to charge you $50 extra profit per unit you sold. Does that make sense now?
Yes. This will make sense. This will make sense.
Got it?
Oh.
Yes.
And then if you see if you put the basic rules for the answer, okay. Like be consistent with pricing policy and said in the first place we talk about that for this answer.
No need, because this is enough.
Or in a
Let me go beyond that. Treatment and transfer pricing. So what is it going to do? Price adjustment unit for is, but by IRB. Got it? Can this will fall under which section? Section 140. That's it.
140. So the implication is they need to increase the price also.
IRB will increase for you.
IRB will increase.
I charge you.
Yang IM50 itu.
Ah.
IM dia akan change kita. Kita kena bayar lah.
Yeah, lah. Based on the $50 profit, you extra you profit. Show how much your tax profit your
It's not
tax.
arm's length.
Okay, go to the next one. Next one you're looking at is Boom. Boom Senaba is a Malaysian subsidiary of Cadbury, which is located overseas. Boom distribute products made by Cadbury, but the product is also sold by Cadbury to local distributor. Okay, so how now? How much you think they will adjust? What do you think they will do?
Wholesale price method.
40% profit.
Resale price method and said.
Resale price method. Can you tell me how much will they charge now?
20.
They should charge about, how much will they charge the situation?
140.
Okay, let's look at this part.
20 ringgit.
IB will likely should be how much? Can you get it right? Or alternatively, what they do?
Increase the selling price.
They charge
Sir, how
Sir, bukan 72.
huh?
How about 85?
How to get 85 isn't it 120 divided by 1.4 markup margin? See, normal gross profit made by local distributor is 40%. Sold at 120, correct? You said 120
Yep.
is after the markup. So cost plus markup equals price, isn't it? So here cost plus 0.4 of cost equals 120.
Oh. Sir, cost dia bukan 100 ah?
Hah?
Cost dia bukan 100.
300 ni.
Hah? 300?
Surat 120.
Price of the album is 100 and is sold.
and kan saya buat satu one pack.
C plus 0.4 C, how much?
1.4.
1.4 C ya? Weh, algebra biasa lah.
Ya, ya.
Apa dia jadi? Ha?
Boleh sih.
1.4 C equals 120. What is
Sir,
cost?
then what is the 100? 100 tu apa sir? Kalau cost dia unknown.
No, 100 is what the parent charge to the subsidiary.
Oh, what the price?
Adakah itu betul? That's all. IRB not looking at the 120, IRB looking at this one.
Oh, they want to check whether it is.
Correct cost or not?
Ah, correct. Okay. Sir.
Are you okay?
Sir, kenapa 100 tu tak letak dekat cost?
100 is not the cost. Because the 100 is an inflated cost.
Dia jual murah kan sih. Sebab
Ha?
dia jual murah sebab saya sendiri.
Dia bukan jual murah, dia jual mahal.
Dia jual dekat
Dia jual kepada subsidi mahal.
oh,
Sepatutnya dia jual 85. Dia jual orang lain 85. Dia jual subsidi 100. Why?
20 to 40.
To reduce the profit.
Oh, reduce.
Why you think everybody must give profit to the subsidiary, is it? The profit better to be made by parent company at a different location, cheaper rate. This is your perception of where profit should be made. There is no such thing as be made anywhere. The place you make is where is the cheapest tax rate. So at this question, you don't know where's the cheapest tax rate. Why would you want profit to be made in Malaysia if Malaysian tax rate is higher?
So 85 tu dia akan charge dekat
Not 85. They will charge to Boom to reduce the cost by 15. Got it?
Dia charge Cadbury lah bukan?
They can charge Boom $15 profit, or alternately they charge Cadbury $15 income.
Maksudnya kalau in exam kan sir, we cannot simply take 200.
Get to see the situation.
Macam mana nak identify tu sir? How to identify?
Which one is the problem? 120 or 100?
100.
120 is not the problem.
Dia price octane
I don't know.
So sekali dia jual dengan harga yang dia octane lain.
The price by the parents.
This is price obtained by Boom is 100 and is sold by Boom for 120. Got it?
Sebenarnya IRP dia akan
And-
charge dekat
You can either charge Boom by reducing their cost, or charge Boom saying that you have to pay for your Cadbury on behalf.
tapi RM15 juga.
RM15. Got it? Okay. Dragon makes a product specifically tailored for its parent in the US. This one is called which method, by the way?
Cost plus.
This is called Sorry, resale price method.
Oh, sebagai parent dengan subsidiary ni mesti.
Resale price. Cost plus is goods cost established and appropriate markup. So here, Dragon makes a product specifically tailored for its parent in US. Dragon buys all raw material from independent provider for $40 per unit and total cost of manufacture is under 60. Price Dragon sell the parent is 200. Analysis of unassociated company that sells same product for a markup of 40%. So what happens? Now we look at the cost plus method. Are you okay? Can?
Aku tengah tulis di tak fikir.
So the first one is why Dragon got investigated. Can you clear now? Why IRB might pick Dragon for investigation. Follow? Second part is how they go after the person. First part is why pick. Second is why, how to go after. Third part is how you defend. That one long story. Repeat that one is very long story.
Dia lebih kurang dengan soalan yang atas tu.
Same lah. This all the same. Number one,
So yang 80 tu daripada mana sih?
200 times 40%.
So 200 divided.
Times 40%. This has cost already.
Sepatutnya kos dia 120 rasa.
Tak, cost dia dah 200. Because they already say cost dia 200. Right? They buy $40 plus total cost of manufacturing 160. They already cost 200. Cannot be lower cost. But they sell at 200.
Oh, dia tak ambil profit. Sebab tu kena.
Follow? All of you clear?
Okay.
Can?
So macam mana nak tahu dia cost besar apa?
Baca soalan? available in the question already? Yes, no? It's 50k cut, that's the cost, right? And they also tell you what the price they sell, right? And you should have figured out it's zero profit, right? They buy from independent provider $40 and total cost of manufacturing is under 60, got it? Okay, let's move on to this. This one, don't worry. This one, for big companies, you must give information exchange, got it? Okay, done. RPGT done already, right?
Yup.
I already put last time, last week.
Yeah. You already give the video.
But you have to watch out.
Already studied so much.
You better finish up RPGT, yeah?
Okay, sir.
Okay. Stamp duty is I give it, right?
Yeah.
Okay, very good. Control
Yeah,
transfer also
already.
done. Okay. Personal tax planning have done, right? Belum lagi kan?
Belum.
Okay. Personal tax planning or personal tax is quite a big area of your question.
So can take 5 seconds.
Yes, let's take a short to 5 minute video.
Kita
Slide.